meeting you, ladies and gentlemen. You're watching Daily Market Review with me, Slava Ismailova. Today, as usually, we are going to start our review with the first currency pair, Euro versus the US dollar. The corrective rally from Friday's low at 1.2495 targets the 1.2614, 1.2627 resistance area. There is capacity for further euro gains, but single print resistance from last week's market profile provides a significant ceiling at 1.2711. A setback below 1.253 would bring the focus back onto the 1.2495 low, threatening a downtrend extension to a long-term wave equality target at 1.2452. Weekly chart Euro versus the US dollar trend is bearish. The next currency pair for today will be US dollar versus the Japanese yen. Monday's Asian session weakness suggests a retest of support at 79.21 should be expected. However, the three-pronged bull divergence on the daily slow scholastic indicator is a warning that the 10-week downtrend is running out of steam. The May 18th reaction low at 79.00 would be bolstered by recovery through Friday's high at 79.82, paving the way for further gains to 80.14 and 80.56. Weekly chart US dollar Japanese yen trend is bearish. The next currency pair for today is Great Britain pound versus the US dollar. A downtrend extension to 1.5599 is still targeted, while resistance at 1.5745 caps corrective Great Britain pound gains. Friday's low at 1.563 remains vulnerable, and Great Britain pound bears have the 1.55 area in their sights on concerned weakness. A push above 1.5745 would provide respite, but only above last week's high at 1.5848 would lift the tone. A weekly chart Great Britain pound versus the US dollar trend is bearish. The next currency pair for today will be US dollar versus the Swiss franc. A corrective setback is underway towards the 0.9485, 0.95 support area. Maximum corrective downside risk lies at 0.945, and dominant US dollar bulls are expected to defend 0.945 resolutely. A recovery above 0.9582 would bring Friday's 15-month high at 0.9612 back into the picture, threatening an uptrend extension towards a 1.618 Fibonacci extension target at 0.9696. Weekly chart US dollar Swiss franc trend is bullish. And the last currency pair for today is Australian dollar versus the US dollar. The corrective recovery is set to extend to May 22 lower high at 0.9937, 0.995 area. However, a fresh wave of Australian dollar bull pressure would be required to force a break through 0.995 in order to bolster last week's 6-month low at 0.969 and projected resistance at 0.9832, while 0.9937 resistance caps the broader downtrend will remain on course for an extension below 0.969 towards the November 2011 low at 0.9663 and the projected rising support line of 10-month bull pennant continuation pattern at 0.9614. Weekly chart Australian dollar versus the US dollar trend is bearish. You have watched Daily Market Review with me, Slava Ismailova. See further details on our site, grandcapital.net. Don't forget to subscribe at our channel at YouTube. As usual, I'm wishing you good trade and see you later.